Well, we have Ajay Bodke of Prabhudas Lilladher also joining us. Good morning, Ajay. Start of the earnings season. We are getting a lot of numbers from various brokerages. Basically, will we exit fourth quarter with disappointment, or are you expecting fourth quarter to have some pleasant surprises?
Good morning. I think we are expecting the fourth quarter earnings to be a tad better than the previous quarter, the third quarter earnings. And the first half of the earnings season, we believe, as always, I think, will bring some positive surprises. We are particularly positive on the private sector retail focused banks. Banks like IndusInd Bank and HDFC Bank figure among our top buys with a medium term perspective. We also feel that I think the pain that the PSU banking system has seen has more or less been discounted by the market. And the government has taken seminal steps in terms of addressing the three key sectors that were under pressure, namely the gas-based power plants, the steel sector, and the road sector. So the fourth quarter provisions, almost all the broking houses have factored them in, similar to the third quarter provisions for the 150 AQR accounts. So I think even there, I think the negative news should sort of should recede as we look at the first quarter next financial year. We think that the IT sector also should continue to chug along pretty well. And selectively, I think pharma stocks also should very well. Insofar as auto stocks are concerned, our preference continues to remain with the passenger vehicles and the commercial vehicle side. We would still wait to see how the monsoons pan out before taking a call on the two-wheeler names and tractor names. I think insofar as FMCG is concerned, we see selectively the urban-focused FMCG players continue to outperform the rural-focused players.
Okay, what would you move into positive before the earnings season? Which set of stocks? Would it be cement, as we have been just discussing?
Yeah, I think there are a couple of cement counters where we are very positive. In the large cap space, we believe that ACC, a lot of efficiencies in terms of costs have not yet manifested. The company has done a lot of investments over the last couple of years, and hence the cost structure, I think, will sort of trend towards some of the best in the industry, and hence an enhancement in margin is what we are factoring in over the next couple of years. So ACC, we are expecting around 18% growth in earnings in the current year, and next year we are expecting to FY18 56% growth in earnings for ACC. The other stock in cement space we are very positive on is in the mid-cap space, JK Lakshmi Cement. Here the company has commissioned large capacities both last year as well as I think in the first half of the current year also they'll commission some capacities. So a lot of volume growth is coming into play. The company is present in the central India as well as in Rajasthan and growing at a good clip. So that's one stock where we are very positive. We are expecting a medium-term price target of 400 in JK Lakshmi Cement.
Okay, medium-term price target of 400 in JK Lakshmi Cement. So that's a stock that Ajay is positive on. Ajay, how are you approaching the Infosys stock ahead of its numbers this week on Friday? And there's been selling by Aberdeen. The stock has been under quite a bit of pressure in the month of April. What is the expectation?
Selling by some institutional investors also is dictated by the redemption pressures that they face. Hence, I wouldn't read too much into some minor selling by even if it's a large holder. We are approaching the stock with a positive frame. We are very positive. It figures among the top buys that we are recommending investors with a medium-term perspective. I think we are expecting around 17% growth in earnings for FY17 and around say 14 to 15% in next financial year. The company is on track in terms of moving up the value chain, and we have full faith in the strategy unveiled by Dr. Sikka. So we are recommending investors to staying put in Infosys.
Okay. Ajay, anything else you would be positive on ahead of earnings season? Cement was one.
Yeah, I think with respect to your previous question, I think there are two companies in the pharma sector where almost all the inspections, all their plants have been inspected by the US FDA in last year. They've gotten all clearance, and hence the overhang that is bedeviling some of the performance of some of the stocks in pharma sector, in our opinion, does not hold true for these companies. The first is Jubilant Life Sciences, where we have a medium-term price target of 578 rupees with 1.5 year perspective. Very strong earnings growth is expected in the current year and next financial year. The other stock we are positive in the pharma space is Aurobindo Pharma. where again we believe that the stock has all the characteristics to outperform a large number of strong US pipeline. The company has been getting approvals from most of its plants, and so these two names, in our opinion, one should look at. Insofar as Sun Pharma is concerned, our belief is that in the first quarter of next financial year, the company is expecting that the remedial measures that they have taken for the Halol plant, the US FDA inspection should happen, and they are positively inclined that they should get an all clear. Once that happens, this is the biggest overhang on the stock is this. Once that gets cleared, I think the stock is in for a strong run.
What about a couple of these other names in the mid-cap space, Ajay, that have hit lifetime highs? Havels, for example, has been gaining quite a bit of ground. Anything from the consumption story from the mid-cap space that you like?
Yeah, I think in the FMCG space, there are two scripts we are very positive on. The first is Britannia. The company has seen a sharp fall from its peak a couple of months back because of concerns of some raw material prices having moved up from the bottom. But the company has unveiled a plan to ensure that the margins do not get impacted. They are moving up the value chain. They are increasing the distribution network quite aggressively, especially in the northern and eastern belt, where they have a limited presence as compared to the southern and the western belt. So we believe that they'll be able to tide over the increase in the raw materials, and hence we believe that in a 1 year perspective, the stock should do extremely well. A target price of 3,200 with a medium term perspective. GlaxoSmithKline Consumer is another company where we are positive. Here, although the volume growth will remain tepid in case of Horlicks, it will still be better than last quarter because last quarter floods in Tamil Nadu had impacted the volume growth. Also, the company's managing director had in media interaction said that they'll be laying a lot of emphasis on some of the OTC products. Globally, they are very strong in some of the OTC products which they will be launching, and the distribution will be done by the listed entity. So these are two names that we are very positive on.